Hello, everyone. Welcome, welcome. I'm going to actually turn on my video just so I can see everyone. Everyone sees me. My name is Latoya, and I am the co-founder of the Profit Room along with my partner, Ernest. And I'm just going to walk you through a brief journey before we actually dive into the concepts of market structure when it comes to the actual process of trading. So let's just get started. And one question I generally like to ask, I always like to ask, what is the number one question most adults ask kids? And that question generally is, what do you want to be when you grow up? And as a kid, you always have the most popular professions. You can think about doctors, lawyers, nurses, police officers. Generally, you think of thoughts, things that you're actually exposed to. Well, it wasn't until I was actually in high school where that question came up once again, asked by my English teacher. She asked the class, what do you want to do when you grow up? Where do you see yourself in the next 5 to 10 years? Never would I have ever imagined that I would have been actually working for Wall Street. When I thought of Wall Street during the time, I thought of men in general, briefcase, walking fast, buildings. That was just my depiction of Wall Street. So I also thought about finance in general. Like, yeah, people in finance, they actually make money. Well, working for a investment bank, I got a whims of exactly how it functioned when it comes to the money aspect of things, the various products, the various mutual funds, the various assets within those mutual funds, all the back end work. I can tell you how to calculate a net asset value when it comes to mutual funds. I can show you how to put together financial statements and financial highlights, all the back end things that have to do with mutual funds. But really and truly, what really sparked my interest were the assets, the actual stocks within the mutual funds, the way they actually fluctuate. So to me, the investment banking world wasn't necessarily where I wanted to be at. I really wanted to get inside of really what made the machine function. And what I ended up doing, I quit my job. Yes, I left the investment banking field in order to sit still, and I call it mastering of the charts. And this is where we're going to dive into when it comes to the actual markets. So, one thing about the markets that I realize markets move up, down, and sideways, very straight to the point. So, with that, we're going to dive into market structure. I absolutely love market structure. Market structure is what I will call king. It is the king because of the concept. So everything else falls underneath. What I mean by everything else, I mean things such as your indicators, right? Your RSIs, your MACD, anything you can think of, even your fibs, your Fibonacci. We're not using that here. So as we know, the market in general moves in waves, right? It moves in waves. So what I'm going to do as well, I'm going to annotate because the process in which market moves freely is what I like to define how to think about market structure. So the market creates impulses and corrections. So this right here, this wave would be considered an impulse, where this movement down would be considered a correction. And then we have another impulsive move, etc., and a correction. But what I'm going to dive into now is something that's called trend points. Trend points is not necessarily my concept, it's been around for a very long time. So, with the trend points, what I mean by that, I'm talking about HH and HL, higher highs as well as higher lows. And this is all a part of market structure. First, we're going to start with a higher high. So, here's our higher high, or this is our high. And then from here, we have a higher point, which is the higher high. So now we have a higher high, meaning that point is higher than the prior high. And then from here, we have a low, and then we have a higher low. Then we have another higher high, and then we have a higher low. So realize that the market, in this sense, is still maintaining this particular structure. Higher lows, and higher highs. That is what we called an uptrend. By technical definition, you are in an uptrend as long as you're making higher lows as well as higher highs. Now, I know this diagram, I try to make it imperfect as possible because we know the markets are not perfect by nature in terms of textbook like this. And we can have a market structure based off of a downtrend. Downtrends in general, we're going to go through the same process. We have lower highs, so that is a high, right? This is a lower high, meaning from the prior point. And you're going to realize that each step of the way, all these highs are lower than the prior high. Same way as the lows now are lower than the prior low. The lower highs in this sense is what maintains the downtrend, while the lower lows is what continues your downtrend. Very important to understand that concept. So the thing with market structure, you have to understand too, once you truly understand market structure, you'll be able to apply this to any markets, stocks, options, forex, futures, cryptos, ETFs. My main point, if it has a chart, you can definitely apply it. You'll be able to know exactly when to buy, when to sell, when to buy, vice versa, because you can understand that you can also make money when the markets move down as well. What we have here right now is a chart of Bitcoin, and I'm just going to go through the same concepts I went through just now when it came to explaining market structure. So remember, a technical definition of the uptrend is a higher high. You'll notice here with Bitcoin, we had lower highs, right? And this is where the structure was broken. So here's my trend line. And then from here, it started to put in what's that? Higher lows. So market structure for Bitcoin in general is a classic uptrend. That's one example of market structure when it comes to a different asset class outside of the stock market. So now I'm going to dive into actually time frames correlation, meaning you can really use market structure on various time frames because within the bigger picture where we have higher lows or lower highs, depending if you're in an uptrend or a downtrend, the same concept applies to trend trading, swing trading, day trading. So monthly, weekly, daily, hourly charts, 5 minute, 1 minute, it really doesn't matter. So, what I'm going to share with you right now are trades placed last week based off of a swing trading concept based off of, guess what? Market structure. Exactly. So, the first trade I'm going to point to is BBY. So, BBY technical entry point was $104.30. This particular trade, like I mentioned, as long as you understand the dynamic of the underlying stock movement, you can purchase the options. It's no difference. It's all about technicals based off of market structure. Since the 7th was a Sunday, when this was analyzed, all three of these stocks, these trades were placed on a Monday based off of the technical entry point of those actual stocks. So now let's dissect the actual chart so we can really see how it works when it comes to market structure. So we have BBY up at the moment. And what we're looking at right now, we're looking at BBY off of a daily time frame. So I'm taking you back into last week's thought process, the moment in time based off of the market structure concept. So with the market structure, what we're looking at is just the structure in general of BBY. So let's see how price moved up. We have a high, price moved down, we have a low. Price moved up, we have a higher high. Price moved down, we have a higher low. So far the structure is up. Then we made, by that wick, a higher high. But we also made a higher low. So we're still technically, yep, up, meaning that's our market structure. So what exactly alarms us? This part right here. alarms us. This is how your double tops and triple tops are formed. And this leg down is what broke the market structure. Why? Because we're no longer putting in higher lows at that point. And this is where levels are formed as well. So levels such as support as well as resistance. So I'm just going to make it in here. So we have level 1, we have level 2 so far, all based off of market structure. So please understand that we broke through the structure on that down drop. Then look at here. We created a high, not a higher high, but a high. And then we created a low, but not a lower low. It's just a low. And then we went up. And guess what we did? We created a higher high from that point. So now we have another level just based off of our lows. And that's what created so far. That's where these levels are formed. And since I'm going to mark this here, I'm also going to mark our last high. And then let's continue on. So we went down so far, meaning we made a higher low from this point. So this is our higher low. This is our higher high, but not necessarily higher than this. So therefore, this became another level of where is basically rejecting the same area. We came down, we briefly broke, and then guess what? We came back up. But this is where it gets a little complex because now there's something I'm going to say when it comes to actual price action. So, actual price action. So, why exactly did we take this trade on the 8th and how did we analyze it based off of Sunday, March 7th? Well, it was based off of the same concept of the actual market structure. This is the entry point date right here. Why would we take a position there? Well, if you think about it, market structure wise, we still held the same structure from this point when price reclaimed that last level, and then we started to put in higher lows. So we're still trading based off of that uptrend in which we found based off of market structure. So that's just one trade. Let's revisit our other trades now. So we're going to apply the same thing when it comes to understanding market structure, all based off of these trades. So the next trade that I'm going to get into, I'm going to get into the MGNX. So this is also a swing at $26.30. So let's see how this one looks based off of market structure. So remember the ticker MGNX. So here we go with MGNX. MGNX. All right, so we're on MGNX. We are on a daily time frame. Same thing. So MGNX, market structure wise, price goes up as we can see, price comes down. This is where we base the first form of support. Price made a higher high, higher low, right? Not a higher high, but a high, same low, so same low, not a lower low. And this is a lower high. So this alarms us because we didn't make a higher high so far, but we broke right through these last low. Therefore, we're more so alarmed that the market structure at this point in time changed. Remember, lower high so far. This is a lower low. This is not quite, what is this now? This is a higher high from that high. So now we're alarmed again. And then we come back here, not necessarily a lower low, but this is where your W's and your double bottoms form. So we found support. That's our support. This is our level of resistance, right? All based off of the past market structure. So with that said, how did we arrive at our entry point when it came to last week? Well, look at this. We bounced off of this low. So we made a higher low from this point. This is A right here. This is the point I'm talking about, the higher low. So the higher low alarmed us that the market structure now was in an uptrend. So therefore, this is our entry. And of course, our exit somewhere around resistance. So far, we got a great perspective that this works. Swing trading, I'm just using different time frames just to show you how market structure actually works. And now let's see how it applies to actual day trading. So let's get the screen share going. All right, so far, MGNX, BBY, we can go through the same thing with SEIC, but I don't want to run out of time. That one had the same fitting in terms of placing the buy based off of market structure and is currently still in a technical uptrend. So what about day trading? Can this apply to actually smaller time frames? Yes, it can. So the first thing I'm going to do is just highlight AMD this morning. We wanted a preferable short technical break, right? Because in a market structure that I'm looking at, $80.79. And then we're going to discuss UPST as well when it comes to market structure on an actual uptrend. So let's get these charts. So here we go with AMD. So AMD, what I'm going to do, I'm going to place it on a 5-minute time frame. So you have to remember market structure is relevant to any time frame. That's the beautiful part about it, is relevant to any market as well. So exactly what I was looking at with this. Well, when it comes to market structure, let's get the annotate. We started making lower highs. This is where the market structure broke on a 5-minute chart, and therefore that was the technical entry point, and down it went. So remember, my goal is to keep it as simple as possible, and hopefully I'm doing just that. So now we're going to go to UPST and discuss the market structure now based off of a 3-minute time frame, because this trade was closed right around 10, almost 11 o'clock before, to prepare for this presentation. Here we go with market structure when it comes to this in a structural sense. Remember, higher lows, higher highs, your technical definition of an uptrend. Well, here's our higher lows, here's our higher highs. So when it comes to the actual structure, is all about putting in exactly your higher lows and your higher highs. And this worked beautifully because on a 3-minute chart, what you're looking at right now, the market structure break in terms of when it stopped putting in a higher high at that point in time. So now we started putting in lower highs, lower lows, and here goes the same low, meaning low, meaning it found support. And then you got to break when this put in a higher high from our prior high. So it's all about market structure at this point, and I provided it to you on a 3-minute time frame, a 5-minute time frame to apply to day trading concepts. And let's switch over to an actual different market. And this market, being the futures market, was able to capture this recording live. So let me explain it as the video plays. So as the video plays, what was the goal with this? Well, the trade was taken based off of market structure off of a 5-minute time frame. You can see this area, that is our last high. This gave us a lower high here. If I were to draw a trend line, you will understand. And then you're going to see exactly where we're coming around right here. Remember BBY, all those other examples where I provided the form off of a support? Well, this is going to be a day trade and an exit based off of that exact formation off of support. So this is what's very important, trying to understand exactly market structure. So I'm just going to fast forward this just a little bit so we can exactly see how it plays out. when it comes to market structure. And look at the wick bouncing right off of that same exact level. So all about market structure. So far, so good. So let's go back. All right, so far we did the day trading aspect, we did the swing trading aspect, all based off of market structure. Um, so from here, I'm going to provide my offer, but I'm also going to leave it open since there's 10 minutes left for some awesome questions. So let's get to some questions because I definitely wanted to leave it open for some questions at this point.
All right, thank you so much, Latoya. Um, we had a viewer here. They're wondering, what do you do to deal with bull traps?
All right. So bull traps is basically when you're taking a technical entry and it like wicks off of like a prior support, I'm assuming, and somebody takes it short and then it goes the opposite direction. So the best answer I'm going to give is stop loss. Is all about the stop loss at that point in time. Not only that, the price action gives it a clue, which all has to do with candlesticks as well.
All right, thank you so much. Another attendee here, they're wondering, um, how much do you take volume into your analysis?
Very, very little when it comes to certain aspects because more than likely, like day trading aspect, anything you day trade should have volume. So it's not necessarily significant in my opinion. Like everything like that comes up on a list or populated has a lot of volume, especially trading within the futures market. There's only so many indices you can trade anyways. When it comes to swing trading, well, volume is extremely important for me when it comes to volume, at least a million. um, I like to see in volume over a million shares. That's what I mean in liquid volume traded.
All right, perfect. Another attendee, I just want to throw this in there. They said, great, fantastic presentation. Another question here from an attendee. They said, an interesting technical analysis based approach similar to trading schools. How do you choose stocks for the analysis, and when do you prefer options instead of stocks?
All right. Well, with stocks in general, it all depends on the stock. I like my options to be extremely liquid. So the prior three trades that I presented based off of the swing trading part, two of them were taken with shares, and only BBY was traded with the options because the options on the BBY side was had much more liquidity where MGNX didn't have much liquidity, meaning they only had monthly expirations to select from. I personally like options where I have selections based off of weekly expirations.
All right, thank you very much. Another question here, one of our viewers, um, they say, is your trading based solely on software, or do you use certain indicators? And if so, what are your favorites?
All right, so my trading is solely based off of market structure. I'm very technical. I do not use indicators. So you will not find me pulling out a fib or using RSI or MACD or anything like that. I like looking at the market structure as a whole and understand where support and resistance lies, aka supply and demand zone, and basically take the trade in the direction of the trend.
All right, excellent. A few people have been writing in about your stops. Um, let's see. One viewer, they're saying, how do you define the stops? They look pretty close to your entry. And another one, again, how do you set your stops? Do you take partial profits at prior tops and let the rest run?
All right. So it all depends on exactly what they were referring to. Are they talking about the day trades with AMD and the UPST where those stops were placed, or the swing trades in general? So I'm going to answer based off of the day trade. So with day trading, the entry points are extremely technical. I can't stress that enough. So based off of a technical breakout or breakdown, I usually can do a 35 cents risk, meaning stop loss per share. So if it's 1,000 shares, I automatically know my stop is going to be 35 cents, which is a $350 risk with a potential to make at least $1,000 plus. So I make sure I have a 3-to-1 risk reward. That's generally how we conduct the day trades as well as the swing trade side. So BBY, for example, it had probably like $1.50 risk, and it basically it moved up like $6 to $8 per share. So that would have been like a 5-to-1 or 8-to-1 risk reward, depending on where you take profits. And another thing, I like to scale out. So I don't just hold and then, have a target. I like to sell into momentum at the same time.
All right, perfect. Another attendee, they're saying, so do you lower the stop loss when lower the time frame?
Do I? Um, no, no. So I have a very particular stop loss for day trading and a different stop loss for swing trading. But the risk to reward ratios are equivalent, meaning it's going to be the same.
All right, perfect. And another one writes in, this attendee, they say, is there a certain percentage that you like to set your stop losses at?
All right. I'm not a percentage type of person. I'm very dollar oriented. So 35 cents is 35 cents. So it's not necessarily if the stock moves a 0.5% or 1%. It has nothing to do with that. But I'm sure that can translate into a percentage if you took time to do it. But everything translate for me technically based off of the stock chart.
All right, thank you so much. Another attendee here. You enter most day and swing trades near the open, or can you enter at any point?
You only enter based off of that technical entry. So in a case like BBY, we had a 104, $104.30 buy point, meaning it could have triggered in the morning, in the afternoon, whenever, but we wanted to buy there. So hopefully that answer your question is not about exactly the time or day, is about when that price hits because it was analyzed off of a technical entry based off of the chart.
All right, thank you. Um, Two of the viewers here, they're wondering how exactly do you select the stocks that you trade?
Depending, through a scanner, Finviz. So Finviz is very friendly, meaning, like I said, I like my volume over 1 million, and usually I just press that, and it takes time because I can have like thousands of stocks populate, but because I'm a visual and technical person, I will sit there and look at each chart. So it is definitely a process. It is not an easy process, but I teach that.
All right, perfect. A couple more attendees. Fantastic presentation. Thank you for your time. And another attendee, they're wondering, what do you see the value of Bitcoin now and this current run that it's on?
To the moon. That's the only thing I can really say, just based off of the projections and other things that I've read and came to understand when it comes to, different asset classes in general. When you think about the overall markets, like gold, the stock market, how long they've been around. So Bitcoin is fairly new, meaning it has a lot of potential to go higher. So I don't like to make like, price point predictions, but I definitely think it has more room to grow in general.
All right, excellent. Looks like we have time for one more here. This viewer, they're wondering, do you just look at the thumbnails in Finviz?
Yes, so it's the thumbnails, and if something catches my eye of interest, I'll pull it up on um a chart, just like I showed you with BBY and the other tickets I went through. I'll pull it up on a trading view chart and examine it even further just to see how the market structure looks like. And one thing I would just definitely say for those that are intrigued about the market structure concept, definitely join the 1 day workshop, doing half off and I like an intimate setting, so it was only limited to 50 people. So you're going to learn all those trade secrets, and definitely I'm going to hammer in on the point of market structure so you can really see the technical aspect of how it actually works.
All right, everyone. Well, we are speaking with Latoya Smith from the Profit Room. You're watching Money Show's Virtual Expo. Latoya, thank you so much for that fantastic presentation today. Really well received by the audience. A lot of great things they're saying about you.
Awesome, everyone. Thank you. See you all next time.